So today I want to go through how much cover do I need for my insurance, and how do we work out how much cover you're going to need when we're going through your insurances. So assessing your needs in detail is really about working out the correct amount of cover you would need, or calculating basically how much money would your family need in order to maintain their current standard of living if you were no longer around, or if you're even seriously injured. What would you do? And this is one of the most important questions that I guess in Australia we need to think about, or around the world, to protect your family's financial future. And putting a price on your life isn't an easy task, obviously, and there is a reality about getting the right amount of life insurance and TPD, etc., versus your personal circumstances and state of your finances. So what we need to look at is, if you are no longer around, a simple checklist or a simple way of looking at this would be, what would you need? So you'd need potentially your liabilities to be cleared, future expenditure, what future expenditure requirements, such as, I always say food on the table, what future education expenses might be. What about medical or recovery income if you were seriously injured, or funeral costs? And then what do you have? So what disposable assets do you have today that you could kind of sell, that would actually enable those around you to be okay from that perspective? And then what continuing income do you have? So we look at that being like maybe income protection or other passive income. So if I go through each of these in detail, what liabilities are we looking? What do we mean about that? So think about your liabilities, and you'll need to look at all the debts that your family will still need to pay, basically in the event that you pass, or even if you have, are you totally permanently disabled, what would be that situation? So sometimes in that, you might look at your mortgage debt. Now, this is not restricted just to your current home, since you actually may have investment properties and holiday homes. So what you need to look at here and consider is, for example, whether you wanted to have, say, your home mortgage paid off if something was to happen to you. What would you do with the investment properties and holiday homes? Would you want also those mortgages to be paid off, or are they self-sufficient that they could continue going, and that you would have the equity, those remaining would have the equity to be able to do that? Or whether you would actually sell those properties and therefore not have a loan as a result of that. So that's something to look at from that perspective. Any other outstanding loans, personal loans, other investment loans, business loans, car loans, and then any other products such as like your credit cards or charge accounts. So then we want to look at, well, what is your future expenditure required? So if something was to happen, annual living costs, and we normally look at that from today through to age 65, on the basis that at age 65, your pension, the age pension does kick in. So what would your family need to basically put food on the table, clothing, bills, etc., to do from now to age 65? Or would you, what would be the situation in your own family circumstances, where maybe one of the family would go back to work full time? Maybe there'd be other scenarios like that. So what you're trying to look at is, well, how would you fund those annual living costs, and are you asking the insurance company to fund those for you? Education costs, what would happen with your school fees? Even your state schools have, I think a lot of high schools I've seen are about $6,000 to $7,000 a year in expenses, even though we are looking at a state school, which a lot of us believe that is kind of free. Other planned expenditure, annual holidays, renovations, what is it that you'd like it to cover? And any investments you might have, so your property or other investments, what do you want to happen if something was to happen to you? And not to forget also homemaker duties. If the non-working spouse was to pass, what would happen in your family situation? Would you need additional help with the children, housekeeping, home maintenance? So there's some of those expenses that do need to be considered. Then looking at your continuing income. So what income would potentially be available upon either you're passing in a life situation or under a TPD or trauma. So, for example, employer benefits at your annual leave and long service leave. If you had significant balances, I know one client has long service leave owing plus annual leave of a significant amount. So we factored that into their cover as well. Income protection insurance. So, for example, if you've got income protection insurance, that would be money coming in under a TPD or trauma claim, which would reduce the amount required in your other insurances as well, from TPD and trauma. Investment income, if you've got passive investment income, and then also any superannuation pension that you may be receiving. Then what disposable assets do you have? So, for example, do you have current savings that, you have in a term deposit or something? The family home, would you keep it? Would you sell it or downsize? Would the investment properties, would you sell those investments such as shares, and then your funds accumulate into super? So we pull all of that together to really try and understand what is it that you need in insurance, and what you're basically trying to balance is what is it that you want the insurance company to cover for you. So if something was to happen tomorrow, because that's the assumption we're taking, what would you like the insurance company to pay for versus what you would be able to pay for out of your own assets and liabilities that you have in place at the moment. So, and it also comes down to your premium as well. Often we'll be chatting with clients, and obviously they'd love everything to be paid for if there was a situation with, was to happen. And then when we come back with the premium, that may be a bit high. So we then balance out, well, how can we work out about lowering the potential needs? And basically what we're saying there is, if self-insuring, instead of the insurance company covering everything, you're self-insuring some of that. So that's something that we look at. But that's how we go about trying to come up and assess your insurance needs. What is it that you need the insurance company to be covering? Please let us know if you have any questions, and happy to help you out. Thank you.